Hello, this is Pamela, the Divorce Mystic. I'm a 25-year intuitive attorney, mediator, and coach who's integrated a spiritual practice into my business. And for our time together today, we're going to be discussing what is a monetary contribution, what is a non-monetary contribution, and what currency or value is placed on either a monetary or non-monetary contribution during a marriage at the time of divorce. Are they even considered? So for our hypothetical today, we're going to start out with a husband and wife who met in college. Once they graduated, husband decided to go to graduate school. Wife decided, okay, I'll support you through graduate school. So she doesn't stay in school. She works part-time to help pay for his education, as well as they took out loans and so forth for him to get his graduate degree. Once he gets his graduate degree, he's now earning $500,000. He has a full employment package. He's contributing to a retirement account, a savings account. He has a health insurance package and other perks with his employment. And wife is still somewhere around the $75,000 to $100,000 mark, and they get pregnant. His wife takes maternity leave, and she decides to go back to work part-time rather than full-time, a little less than part-time, because at this point, husband's career is even getting better and growing, so her role has become more important in terms of supporting him and hosting parties and events and things that are required to continue to support the upliftment of his career. A couple years down the road, they divorce, and that's where we find ourselves. So when we're evaluating or looking at the monetary contributions versus the non-monetary contributions, we'll start with monetary. The husband's salary of $500,000 a year, of course, is a monetary contribution. And if you're on the side of the husband, you're thinking, wow, I'm going to consider that since the husband will consider since I made all of the financial contributions during this marriage, I want more of the share of the marital estate, or I want to pay less in terms of support, whatever his interest may be. We look at those monetary contributions that he made in terms of salary. So he may have purchased the house or put a down payment on the house and paid mortgage payments. He might have put money into a retirement account. He might have put money into a savings account. He might have contributed in other financial ways, such as paying for all of the household expenses, things related to the child, just other household expenses that we don't really think about, but food, electricity, gas, other utilities, just day-to-day expenses, clothes that you need to survive, food. So now we look at the wife. What contributions in terms of financial contributions did wife make? Well, in the very beginning, if we are allowed to push back and say, wait, from the wife's perspective, she not only supported her husband after college to receive his graduate degree, she contributed her salary that she was earning. She allowed them to take on liability, which even whether or not her salary or the husband's salary later paid towards the reduction of that student loan debt, regardless, or however they took the debt, regardless, it was a contribution that was made in some way or the other by her to allow the debt and then to help to pay down the debt. Now we look at the non-monetary contributions. What non-monetary contributions, if I'm on the side of the wife, am I going to bring forward in her interest? Well, she helped her husband through college, and she chose to not go to graduate school. So she took away from herself or stepped down in terms of which one of the two of them were going to boost their career and which one was going to be more of the supporting role. So she agreed to a supporting role. She also agreed that she would have a major role in the household duties. So she ran the household during her husband's college years, her graduate years, as well as once he graduated, because then he was even home less. So she did all of the household management. So think of all the duties that you do if you're home taking care of a home. You're a cleaner, you're a manager. What else do? You're a cook, you're a driver, you're an Uber or taxi driver, right? You do all of the things that are necessary. You're a planner. So she was planning events and parties for his business associates. So now she's a business planner. So if we take a look at all of that, even before the child was born, now we're going to bring in the child. What did she do with their baby? She took care of the baby. She did all of the child care. We're going to assume for this hypothetical that she did all of the daycare and night care. What does that mean? She fed the child, she bathed the child, she did all things related to the child. I don't need to, run the list down. Most of you know what that is and what that entails and how much actual work goes into that. So now we're a daycare provider that it's extended for 24 hours. So if you look at those things individually, it's not that we're going to put a price tag. In some jurisdictions they might, but put a price tag on all of that. But she's a chef, she's a cleaner, she's a caretaker, she's a party planner. All of these non-monetary contributions that she made to the family, if you put a currency or a dollar amount on them, you can see how in a lot of cases, or in most cases, those non-monetary contributions have the same value as the one who put the majority of the monetary contributions into the marriage. So when you're thinking about your role and thinking about where you fit into that scenario, just keep in mind, if you're the one who's earned most of the salary or earned most of the income and contributed that to the family, unless it was all separate income. And what does that mean? That was income that was earned before the marriage or gifted to you in some way that was kept completely separate. Each jurisdiction defines separate property differently. So just assuming for a moment all of your income, maybe you're a trust fund, you receive trust fund money every year and it's all separate property. The trust fund was separate property set up by your family. Whatever that may mean to you in terms of all separate property, unless that scenario applies to you, everything that you earned during the marriage is going to be considered part of the marital estate. And those contributions that you made are actually considered contributions that were made towards, if you're looking at a marriage like a business, think of it just like that. It was money that was contributed to the business. And now when the business is in a dissolution, those things that were acquired during the marriage, whether it be a family home, a retirement account, a savings account, cars, liability, whatever it is that we are discussing in terms of a distribution at the time of divorce, that's how we're looking at them, and that's what we're defining as a monetary contribution. So same thing, looking at the spouse in this case, there has to be some recognition that to allow you to have earned that kind of income, that your spouse must have contributed in some way, particularly if there's children, whether it's one child or five. In the event that one party provided more of the non-monetary contributions in a particular situation, is there value? Yes. How much value that is of course going to be individualized to each case, but there is going to be consideration for what the non-monetary contributions were in that case, and do they even come close to or half equalize or balance out the monetary contributions that were made on the other end. And same thing with the person who made the non-monetary contributions. We have to consider, yes, I did all the daycare and the taking care of the house, and I hosted parties, and I was a planner, I did all of these things, but I also have to give value to the person who earned the income. So in terms of putting a value, what we're looking for is there a way to balance out the interests, that the person who put in all of the monetary contributions, was there some balancing of the efforts in that case. Now remember, there's going to be situations where somebody put a lot of monetary contributions and the other didn't do anything, or vice versa. So we're not talking about that in this case. In this hypothetical, it's just somebody put monetary contributions, the other party put non-monetary contributions, and we can see in that instance, if you can just taste what it's like to try to look at it from the perspective of equities and balancing of those interests, you can see why a court, or even in a settlement discussion, why we're trying to not necessarily put a dollar amount, an actual dollar amount, on what the non-monetary contributions were versus the contributions that were made on the side of the person who made the monetary contributions, but we're looking to see, are they level enough that one party shouldn't be walking away with more than the other just because there's an imbalance in those equities. So the bottom line is, yes, there is a value to both monetary and non-monetary contributions. Each jurisdiction, as a reminder, each jurisdiction is different and each fact pattern is different. So of course, for your particular situation, you're going to want to talk to an attorney in your jurisdiction and raise the facts that are specific to your case so that you will know how they will and will not be treated in your divorce. But always remember that the court's interest in most cases is to balance equity. That's what we're doing. We're trying to create some kind of equity in a distribution, whether, if you look at it in terms of assets versus liability, there's a lot that goes into that and deciding how that's divided. But just think of that as well on the scale of how do we make this balance out between the two based on the history of their case. And when we're dealing with contributions, we're dealing with the monetary versus not monetary. It's just one element of a case. There's many more. And again, how a court treats it and whether or not they put a value and how much value is going to be individual and specific to a court, not just a jurisdiction. Sometimes it's a particular judge within a jurisdiction who treats things differently regardless of what the code or the case law says. So just keep that in mind, that your case is specific to you and this is for informational purposes only. But know that you've got this and you give credit to both sides when necessary, and you will find that if you do, a settlement is most likely for you in your case, rather than pinching pennies and counting pennies as to who did what and what is valued more. There's a way of looking at it in terms of, unless you're on one of those extreme cases, that there's a way to look at your situation that, yeah, I gave more financially, but they gave more in a non-monetary sense, or vice versa. Your case is right for settlement. Your case is right for you to decide how you're going to divvy up your assets and your liabilities, rather than to leave it to a court to decide. Once you understand what your rights are, what the law is in your jurisdiction, and you have the help of a lawyer with you, even if you're with that person on a consultation basis, at least you understand your rights. Know that you always have the right to make decisions for yourself, and you have a right to put a value on things that may be in line with what a court may do and can certainly be outside of the box. Out of the box thinking is the best way to deal with your own specific case. So again, you've got this. Until we meet again, friend, namaste.